Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor at SteveSaretsky.com. Welcome back to the show, Steve.
Thanks for having me on.
Are real estate sales and prices up?
I think it's kind of a mixed bag. I think that obviously the media is extrapolating sales and headlines, and I think that the average consumer is kind of interpreting that everything is up. It's just not like 2016, 2017 where everything was going in a straight line up. I think that it's a very segmented market. So we have detached house sales way up, and prices are moving up. They are up quite a bit since pre-COVID, which is hard to believe. But then you have other segments of the market that are not performing as well. For example, like a downtown Vancouver condo, where you have this whole work from home movement. That's probably the hardest hit segment, where you have prices probably down about 10% since COVID. So, definitely significant shifts in the market in terms of consumer preferences, and that's kind of what's driving overall activity levels. So it's not as simple as just saying that, sales are up everywhere and prices are up across the board. It's very much a segmented market right now.
With partial lockdown still in place, where is the money coming from for the detached homes?
Banks. Banks for lending money. I think everybody in April was saying, well, the real estate market was going to collapse. How can the banks lend any money? Nobody knows who's going to have a job. And lo and behold, there were certain countries even arguing that there should be a pause in the real estate market because how can the banks prudently lend money? Fast forward 4 or 5 months from there, the banks are certainly lending money. I'm not finding credit to be tight by any standard. And if you look at it, I think that the fiscal and monetary stimulus is kind of overwhelming the market. Canadian household incomes up 14%. Household savings up 28%. So the government transfers, the lost income, government transfers far exceeded lost income over that period during COVID. So a bit of an overstep on the Liberal government side in terms of how much fiscal stimulus they provided to the market, but that seems to be sort of keeping households in check for now. Obviously, consumer insolvency is falling off a cliff as well with courts closed, and also with mortgage payment deferrals, credit card payment deferrals. All this is kind of concealed the market, and it's kind of helping, at least for now, conceal the weakness on the consumer credit side.
With interest rates moving lower, are people refinancing their mortgages?
We're hearing some of that. I mean, certainly rates. I mean, you can get a 5-year fix today at 1.9%. So, I mean, rates have never been cheaper. Could they go lower? Certainly possible, given what central banks are coming out telling you exactly what they're going to do. They've already told you the exact playbook that they're going to run. So, I know there's some people taking advantage of that. Obviously, banks are a little bit more prudent now on the refinance side. I would say it's quite competitive from the bank side in terms of new mortgage applications and trying to compete for new mortgage purchases. On the refinance side, things are a little bit tighter.
Is it normal for real estate to appreciate during a recession?
No. I think this is what makes it so unique. And this is not like a Vancouver thing. This is not like just a Canadian thing. If you look at the U.S. housing market, despite all the turmoil over there, that's a housing market that is robust. I think U.S. Home building confidence hit an all-time high in September. If you look at mortgage purchase applications, for example, in the U.S., they're running, I think, at a high for the year. So this is in my opinion, just a response to what is simply central banks flooding the system with liquidity, coming out and telling you that they've slashed rates to zero, and unprecedented quantitative easing from global central banks across the world is flooding not just the housing market, but obviously we can look at the stock market, and that's certainly enjoyed a V-shaped recovery there, at least so far. So again, I think it's more so all these asset classes are moving in tandem because of how aggressive monetary policy and now fiscal policy as well is ultimately supporting asset classes.
We'll have more with Steve Saretsky right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what's the Bank of Canada doing?
Continuing up with their forward guidance. So obviously zero rates for the foreseeable future, well into the recovery. Same thing for quantitative easing. They just re-upped their commitment to purchase $5 billion of government securities on a weekly basis, $5 billion. So these are unprecedented numbers, and they remain committed to essentially devaluing the currency and supporting asset prices. So that's pretty much their mandate. Obviously, they say that they're targeting a 2% inflation target. I think it's one of those 2%. They'll probably let it run hot once it goes over 2%. But again, I just find that for the average person, you could argue if CPI is truly an accurate indicator. So, I think that the stimulus measures in place. You can see that they've obviously helped out the housing market through their Canada mortgage bonds purchases. Those are helping suppress mortgage rates. So obviously when you have rates a 5-year at 1.9%, obviously that encourages consumers into the market. And so that's kind of what you're seeing.
Is the rental market a canary in the coal mine for the real estate market?
I think that it reflects more of the real economy. And the reality is the real economy is hurting. And I think that you can see that in the rental market, where perhaps lower or more middle class people will be in terms of, they'll be renting. And I think that those are the jobs and the incomes that have been hit the hardest. And obviously we've seen a pullback in immigration here as well. So that's impacting the rental market. And I think that that's translating into less demand on the investor side of the housing market. What we're seeing is, again, everybody wants to talk about sales up, housing market's doing, fairly well during this pandemic. That is almost exclusively driven by end user demand, primarily by people wanting primarily people are spending more time at home, realizing that they need more space, or they want more space, or they want to move out to the suburbs, or their job has changed and they're relocating. So that's kind of what's driving the housing market. It's not investors and speculators, buying one-bedroom condos, hoping that they're going to appreciate and the rents are going to go up. What we're seeing is weakness actually on the investor side. They're not very active at the moment, and I think that is partly reflective of how the rental market is doing right now. It's much softer than it was.
We'll have more with Steve Saretsky right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, as mortgage deferrals come to an end, are we likely to see more inventory and more defaults on mortgages?
I think that the defaults are certainly unquestionably going to increase. I don't think anyone can argue that. I think that we'll have to wait and see the true extent of who actually needed the deferrals. Obviously, there's some calculations out there that suggest that if 90% of people who deferred their mortgage get back on their feet and continue to pay their mortgage, that would leave 10% of all the deferrals. That would result in roughly a 2% arrears rate, and that would be the highest that we've seen in a long, long time. So, again, it's hard to really predict how many people are truly in need of a mortgage deferral, what's going to happen with the virus, what's going to happen with fiscal stimulus. Looks like the Liberal government is pretty committed to continue to dole out the cash. So, again, I think logically it is pretty easy to anticipate that deferrals are going to result in more listings coming to the market. It's going to result in foreclosures increasing. So whether the demand is there to absorb that new supply remains to be seen. Certainly, I think I'll be cautious of making any predictions here, as I think that anyone would be surprised given, if you had said when the pandemic started, basically in March or April, if you had said to somebody that in 6 months' time, we'd see multiple offers, record sales, and for the most part, higher prices, I think even the most bullish of housing bulls would have doubted you and probably laughed at you. So it kind of goes to show you how much is involved in consumer behavior. It's very hard to predict. I think that but anyways, long story short of it, yes, I do think that as we watch forward, that's going to be the next sort of thing that could impact the housing market, is the deferral cliff, which has been widely talked about. So we'll be keeping a close eye on that.
Is the ongoing COVID scare causing sellers to hold off listing their properties?
No. We saw that in April and May when people were very nervous. It was an unknown virus. People didn't know how to react to it, and then they did hold off inventory. So that did create some inventory shortages as the market reopened. Hence why we saw a flood of demand coming into the market at a time when inventory levels were quite low. That was what ultimately created a lot of multiple offer situations and the bidding up of certain product. And now we're in a situation where new listings are actually running quite high. We actually had record number of new listings in July and August, and it looks like September will be a fairly high volume in terms of new listings. So again, whether or not if this trend continues of new listings, I certainly suspect that will put a damper on the market. It remains to be seen if the demand, that pent-up demand, quote unquote, can actually sustain itself, or was it more just a cause of the reopening, people wanting to change their living standards, living situation, and if that can actually continue into the fall and the winter.
Are there comparisons between COVID and the Great Depression?
I think that was certainly the belief and the worry when things unfolded, obviously looking at how much GDP declined sharply. It was the largest contraction Canada's had since the World War II. So certainly that was something that was on everybody's radar, but I think the difference maker this time around is the amount of monetary and fiscal policy that has come in and basically really overwhelmed the market. Again, if we talk about it, the fact that household incomes were up in arguably a depressionary scenario tells you pretty much all that you need to know. So I think it really is the measures that were brought in this time that make it different than the Great Depression.
Can immigration affect real estate markets on the way up and the way down?
I think so. I think that we're seeing that obviously in the rental market. We saw very low vacancy rates pre-pandemic. Obviously, immigration was running hot. A lot of jobs coming here, people coming here for work, school, etc. So I think with the pullback in immigration and population, that's going to it's a headwind for the housing market. There's no question about it. So we'll have to wait and see how all these factors kind of weigh in on the market over the coming 6 to 12 months.
In real estate bull and bear markets, is it mostly the value of land that fluctuates?
Yeah. Well, predominantly it's the value is obviously in the land. Typically your structure's depreciating in value over time. So that's pretty much what it is. It really, in my opinion, it's always come down to the availability of credit. That's what ultimately drives the booms and busts. Today, I think if people ask, and there's certainly, and I'm one of them that's surprised how resilient the housing market has been. I ultimately believe it's just the availability of credit today that banks are lending, obviously through the support of global central banks, which are providing the liquidity to banks to actually lend that money.
Would a guaranteed basic income be good or bad for real estate and the economy?
I think it would probably be good for rents. Probably could be very well inflationary. So I think that would be good for rent. So vice versa, that could be good for real estate. I think certainly in my view, there's a concern over the amount of fiscal and monetary policy that's being pumped into the system and the ability or the desire of these policymakers to actually pull in and rein back that amount of stimulus when the time comes. I think that it's going to be politically unpopular that once you give out things like CERB and what could be a UBI, it's very difficult to then pull that back. And so my concern would be that you could run into an inflationary scenario. And I think that basically what central banks are doing is they're explicitly devaluing the currency. And in my opinion, that's a signal to own real assets.
Is there a push towards Marxism in Canada, and what would Marxism do to the price of real estate?
Well, I think obviously everything is shifting left. Politically, it's pretty obvious. Again, I think that, the younger generation coming up, millennials, obviously are technically actually worse off than the generation before them. That hasn't happened in a long time. So given the lack of affordability and how hard it is to kind of get ahead today, that people are looking more and more towards government for help and for handouts, and I think that is obviously swinging left, and it certainly looks like we're going down that path given all the fiscal stimulus that's been coming, and the talk about universal basic income and reforming our economy as we reopen. And so, again, it's hard to anticipate what that will look like for the housing market, in my opinion, down the road. Well, I think we're already starting to see it in parts of Canada, but I see that as being more, anti-landlord, anti-capitalist. So that's going to look like rent controls. I think that's going to look like higher taxes on real estate, in my opinion.
Yeah. For example, in Ontario, there will be no rent hikes next year.
Yeah, no rent hikes. Obviously, in BC, we have similar programs in place where they definitely, it favors the tenant. They've put freezes on how much you can increase rents. It's very hard to evict tenants now, for example. You have to have a lot of reason to actually get a tenant out. So, and obviously Ontario is the latest case. So I think it continues to go that way. I really do. I think it's a very easy call to make.
Steve, how can people get in touch with you?
Best way is by email, steve@stevesaretsky.com. Also pretty active on Twitter @SteveSaretsky.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. If you have any questions for him or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.